Again, welcome to today's webinar, Things You Should Know About Federal Taxes and Your Business. Today's webinar is presented with AnewAmerica in partnership with the IRS. AnewAmerica, just to share a little bit of information about us, we are a nonprofit for over 20 years serving in the community to assist entrepreneurs, whether you're starting your business or in business looking to grow. And so our services are one-on-one consulting services we provide, as well as technical support and webinars to educate the community, such as what we're doing today. So we welcome you all here today for this great webinar. And just a little bit of disclosure, AnewAmerica is in part funded by the U.S. Small Business Administration, and the opinions, conclusions, and other recommendations expressed with herein are not necessarily views of the SBA. Note that reference to any specific product, process, or service, or to the use of any vendor for the information and convenience of the small business community and does not constitute or imply any endorsement by AnewAmerica. So to this end, we are going to have a great facilitator today with Tori Chavez. She is enrolled agent with the IRS and owner of Tax Goddess. So you're in great hands today with some great information being provided to you as entrepreneurs to help you look at some important topics as it relates to your federal taxes and your business. And so at this time, I'd like to turn it over to Tori. Again, she will go through the presentation and questions will be answered at the end of the session. And Tori, I'll turn it over to you now. Thank you. Terry, you're on mute.
How about if I unmute? There we go. So, as I was saying, an enrolled agent for the IRS does not mean I work for them. I do not. I'm a small business owner just like all of you are. So what that means is my tax preparation license is federally based versus just state-based like a CPA. A CPA's license works for the state that they have their license in. An enrolled agent's license is for the whole United States and its territories. So essentially my license has no borders, okay? I'm working as your instructor today. I volunteer my time for this public service. I am not paid by the IRS for this. I do not have a preferred relationship with the IRS. Trust me, I can get audited just like any of you can. The IRS and the government, United States government, does not, oops, you covered my thing there. Okay. The IRS does not endorse or guarantee my services as an instructor or sponsor or any sponsoring any organization with which I have a relationship with. And I do not get any special treatment from the Internal Revenue Service, though sometimes I wish I did for some of my clients. Okay, so I should be able to go to the next screen. There you go. What you need to know about your federal taxes and your business. So there's a number of things you need to do. There's a number of steps in which you need to go in order to get. So some of the things we're going to cover today are going to be what's an EIN, and you'll find that as you get into business ownership and tax work and tax stuff, we talk in acronyms. We abbreviate everything because some things have very, very long names. We're going to talk about record keeping, accounting methods, types of business structures, because there's several different types of structures. So we want you to know what those different choices are, because not every business type is good for the type of business you're in. So we want to make sure that we try to coach you on how to pick the right structure for what kind of business you're going to be doing. right? So the first thing you're going to need is an employer identification number. What that is it's a number from the IRS that determines and allows you to report such things as paying wages, having a self-employed retirement plan. That EIN is also specific to what kind of business entity you are, whether you're a sole proprietor, a partnership, a corporation. If you have other types of taxes with which you have to pay, such as payroll taxes, which goes along with paying the wages, ATF returns, okay? Your bank is going to require that you have an EIN, because when you get that EIN, it separates you as an individual from your business. So right now, many of you might be sole proprietors, and we're going to get into some of that here shortly. But you are your business, but if you form a different type of entity, that entity becomes a person in the eyes of the IRS. So if you're a corporation, the corporation is now a person. The only thing it can't do is make more corporations. It can have sub corporations, but it can't make new corporations. All right. You can apply at the IRS website, and you always want to go irs.gov.gov. So if you go to irs.com, that is not the government website. It looks similar, but it is not the website. So a little bit later, I'll share my screen and I'll show you what the actual website looks like. But you go to irs.gov, apply for an EIN, and you're going to fill out a form SS4. The SS4 is how you get your EIN, and you can get it online, and you can have it in a matter of moments in most cases. The publication that's being referenced here, publication 1635, is a pub in which you can go in and understand the rules for your EIN. Next slide. Record keeping. Record keeping's fun. The first thing you're going to want to do is you're going to want to download Pub 583, starting and keeping business records. You want to keep your records. That's a common question. How long should I keep my documents? Forever. But storage can take up a lot of room if you keep your records forever. Please keep them a minimum of 3 years. For California-based people, I suggest you keep them for 4, mainly because the state agency, our franchise tax board, can audit 4 years out, whereas the audit period for IRS is technically 3 years, right? And again, 4 years for employment tax, that's publication 15. It used to be called Circular E, but now it's Pub 15. And Pub 15 actually has a couple sub-pubs. I do know that the IRS works in conjunction with the state employment people to offer some free payroll classes. So that might be another class or another lesson down the road that we're going to talk about. But it might be something you might want to look into if you're jumping into hiring employees fairly quickly. If you buy a piece of business property, such as a piece of equipment, if you're in construction and you buy a big old piece of equipment, if you're in the restaurant industry and you buy a stove, if you're in any kind of service industry, that asset that you buy is a tax item. So you want to keep the records on that for as long as that property is being used for business purposes. Next. Okay, bookkeeping. There is single entry bookkeeping and there's double entry bookkeeping. Single entry is the easiest. It's a daily or monthly record of your income and expenses. It focuses on what we call the income statement or profit and loss statement, and it is sufficient for filing your tax return. Now, if you want to be more accurate, you want to do double entry. It's a checks and balances. It makes sure that you balance your checkbook, that for every expense you have that receipt, for every asset you have what's the loan for it, or did I pay for it? It's basically a little bit more accurate and a little bit safer for you as a business owner to be running a double entry system. There are many online services. And again, we don't endorse any special products. So you will not hear me name any special accounting or tax programs by name in our discussion. Because if I do that, then I'm endorsing it. So I'm happy to talk offline with people, but I cannot do that during the presentation. You want to be on cash basis. You report the income when you receive it, you deduct the expense the year you pay it. And that's also listed in the Pub 538, which we referenced a minute ago. Accrual accounting means you report the income in the year it's earned and you deduct the expenses in the year you incurred it or made it. So a good example of that is I bill a customer on December 31st for services rendered. They don't pay me until January, but because I'm on the accrual system, I report that income in the year that December took place, even though I didn't get paid until January. So, and the same thing happens with expenses. I got a bill from the vendor on December 1st, but I didn't pay it till January. But because I got the bill, I can deduct it in that year that I got the bill. If I have inventory for my business, I have to be on accrual, because inventory is one of those items that it's a statement of fact, and you have to do inventory, and you've got cost of goods sold associated with it. So they want you to be on accrual-based accounting for that. Most of your businesses may end up being on cash, but some businesses are going to have to be accrual. Okay, so we'll talk a little bit, we'll answer some questions on that at the end if you have some questions. What type of business structures? A sole proprietor. I am the person who owns and operates the business. Nobody else owns and operates the business with me. I am completely and solely responsible for all items on that business. I make all the decisions. I do all the accounting maybe, or I maybe hire someone out to do the accounting or bookkeeping, but it's just me. So if I make a mistake, I'm the one who could potentially get sued. If I'm an electrician and I wire a house and I burn that house down because I miswired it, well, that customer gets to sue me directly. And they can take away my assets. They can sue me for my assets and my possessions. Of course, you're going to want to have some business insurance, hopefully, but we'll talk about that in a little bit. So that's your sole proprietor. So what's a partnership? A partnership is like the next step. You and another individual are working together on this business. And maybe you own the business 50%, 50%. You make the decisions 50-50. You put the income, you split the income and expenses 50-50. And you file what's called a Form 1065. Now, a sole proprietor files a Schedule C, and that Schedule C goes on their 1040, their regular standard income tax return. Whereas a partnership will file its own tax return, and it's a Form 1065. That 1065 basically issues each partner what we call a K1. That K1 is that partner's share of the income and expenses, which then goes on their 1040. So it's what we call a flow-through entity. The profits and loss flow out of the entity and to the individual partners. Okay. Next, we have a limited liability company. Limited liability companies were created by lawyers. There is no limited liability tax return in the IRS. The IRS considers it what a disregarded entity. There's no such thing in the IRS pub or in the Internal Revenue Code. There's no form for an LLC. So if you're an LLC, you will either file as a sole proprietor on Schedule 10 if, say, you're a single member LLC. If you are two or more in a LLC, you'll be a partnership. You would file the 1065 and issue out the K1s as that limited liability, but as a partnership. So again, limited liabilities don't exist in the Internal Revenue Code. They are a state entity. They are a legal entity that's usually formed by a lawyer. The idea behind the limited liability company was to limit the liability of the people that are in it. You can do the same thing actually with a really, really good insurance policy. So it's kind of a misleading name. And I get clients every year that'll come and they go, I did something, I formed a limited liability. And I go, oh, why'd you form a limited liability company? Did you really need that? I mean, what kind of assets are you trying to protect? So those are the things you're really going to want to investigate before, or if you've already formed a limited liability, great, you've already formed it. You may want to have a discussion with a tax professional and say, is this the right business entity for me? Because any entity you form, you can actually undo. You can transfer to a different type of entity. And then that leads the last two, corporations. So that limited liability company, a partnership, they are flow through entities and the profits flow out of the company and to the partner or owner. A corporation is its own entity. It is an individual in the eyes of the IRS. It has to have its own EIN, as does any of the other entities. The difference is the corporation pays its own tax. It has its own tax rates, its own structure, and it has a lot more flexibility as to what it can do as far as wages. And it has shareholders, not partners, it has owners, but they're referred to as shareholders. Okay. Now an S Corp, if they make an election to be an S Corp versus a C corporation, it becomes a flow-through entity. So the profits and loss come out of the S Corp and go to the individual shareholders, usually based on the percentage of shares of stock that they own. And yes, corporations issue stock. The other three entities do not have stock. All right, so that's one of the main differences. There are a few nuanced differences and a few more detail-y type of differences, but this is a basic business structure class. Okay, so there's your 4 types of entities. Let's talk about a partnership. Partnership, it's so easy to organize. The members put in money, property, labor, or skills. Sometimes referred to as sweat equity. The Internal Revenue Code has some very interesting definitions as to what sweat equity is, but sweat equity basically means compensation. You worked, you gave service in exchange for something. So you gave services, you rendered services in exchange for a piece of this partnership, a piece of this business entity. Okay. The members share in the profit and loss. So you could have, I once worked with a law firm that had 6 partners. So they shared in the profits and losses based on their ownership percentage. Decisions are divided amongst the partners. The whole group usually has there's usually a partner that has one little bit more amount of percentage than the others, so that you don't have an equal necessarily partnership, because how do you make a decision if you come to a stalemate? If you're 50-50, someone has to have that deciding vote. Someone has to be able to make that decision on behalf of the group. Okay. Liability of the partner is usually limited to the amount of their contribution or their percentage of ownership. Again, we file the Form 1065, we get a K-1, and the publication on the IRS website that goes into a lot more detail about partnerships is Pub 541. So if you're thinking about an LLC with multiple members and having to file as a partnership, or just going straight to the partnership entity, you probably want to get a hold and maybe peruse Pub 541. Okay. Limited liability. The owners have limited personal liability. It does have management flexibility with that flow through taxation, which we talked about. LLCs, limited liability company, or an LLP, limited liability partnership, are treated as sole proprietors, a partnership, or a corporation. So that LLC can elect or be disregarded and file as one of those three things. If they elect to be a corporation or they're electing to be a partnership, they must file Form 8832, basically letting the IRS know what entity they are filing as. Okay, I'm choosing to file my LLC as this type of entity, a 1065 partnership, an 1120 S corporation, or an 1120 C corporation. Shareholders on an S corporation, the shareholders are in agreement when they decide to elect to be an S corp. I recently took on a client who was a corporation who thought he was a regular corporation. It's him and another person, and the attorney that filed the paperwork elected for them to be an S corp. And he didn't know what an S corp was, and he didn't understand the rules of being an S corp. So we're unwinding some of those things, and we're going through the rules of being an S corp. You file the Form 2553, which is the election of a small business to be treated as an S corp. The S corporation does not pay income tax itself. Okay, the S corp flows the income out to its respective shareholders. The shareholders then report that income on their personal tax returns, their personal 1040s. Okay. Corporation. As I stated a little earlier, a corporation is a legal entity and it's separate from its owner. A lot of times it's hard for an owner to understand that when they form a corporation, they are not the corporation anymore. The corporation is its own person. They can't just go to the bank account like they did when they were a sole proprietor and withdraw $1,000 of their money, because it's not their money anymore. It belongs to the corporate entity. So going in and taking a draw from the corporate bank account is essentially embezzling from the corporation, because it's the corporation's money, not the individual shareholders' money anymore. Okay. It has duties and rights of its own, so it does have rights. The owners are now stockholders or shareholders. It's the same thing, just different names for them. The liability is limited for the shareholders. So if that electrician I was mentioning earlier burnt down the $1 million house, that homeowner would sue the corporation and at that point be blocked from the shareholders. So the shareholders get to almost hide behind that corporate veil. It's what we call the corporate veil. As long as they're maintaining all the legal responsibilities and duties of a corporation, they can't come through that corporation to come to the shareholders. Right? Can transfer the ownership working with a client in the San Diego area who he has 100% of the stock. Okay. I see your question in the chat, Ella. I'll get back to you at the end. All right. So that owner owns 100% of the stock. If someone else wants to buy into he has the right to sell that stock and transfer that ownership on his own, and maybe have to have approval from his board of directors. Usually a corporation must have at least 2 officers. It must have the president and it must have a secretary. It doesn't have to have a vice president, doesn't have to have a treasurer. It must have a secretary and a president at all times. And they can be the same person. I happen to be a corporation. I am both the secretary, treasurer, and president of my corporation. So I wear all the hats. Right? You need to get business capital, sell stock, raise capital. And again, it pays its own tax. So that's one of the beauties of that corporation. Okay. If they take income is either distributed in the form of compensation, wages, or dividends. A corporation is the only place where you can actually take dividends out in 2 ways. All right. Mostly it'll come out if you want to return a shareholder's or stockholder's investment and it wasn't a loan, you pay a dividend. Okay. The state, since we're in California, I will say that the Secretary of State of California requires registration through them. You have to submit your articles of incorporation, also sometimes referred to as a charter, where you're going to be doing your principal business, how many shares of stock it has to sell, who can create debt separate from the shareholders. The corporation is allowed to create its own thing. It files a Form 1120. Okay. So our partnership with the IRS for this particular seminar is we're working with the AnewAmerica's Women's Business Center in Oakland. Their phone number is there for you on the screen. Would you like to jump in there?
Yes, thank you. Thank you, Tori. And so we'll open it up for questions now. You can unmute yourself if you have a question, and we will have a few questions in chat I'll read for you.
Okay, I do see the one in chat. Okay, an LLC, if you are a single member LLC and self-employed, you will file a Schedule C on your 1040. You are a disregarded entity, even if you have an EIN. And yes, you do need an EIN. I always suggest that a business owner get an EIN, even if they're a sole proprietor, because they don't have to give their social security number to anybody who wants it for purposes of issuing 1099s.
All right, and any other questions at this time?
I wanted to say thank you for answering my questions. I just wanted to have a follow-up real quick. So as I'm filing my taxes on a Schedule C on 1040, I am paying into Social Security, correct?
Correct. Any profits of $400 or more, you'll be paying into Social Security.
Okay, thank you.
Thank you. Next question.
I have a question for holding on to records for 3 years, you said?
3 to 4 years.
3 to 4 years. Okay, I have been trying to hold on to mine, like any receipts or anything, for 7 years. So it's just 3 to 4 years?
You know what? I appreciate that you're holding on to them for 7 years. I like the 7-year.
Okay.
Sometimes, depending on how long it takes, maybe the IRS or the state to initiate an audit. Audits can be 3 years out from the time you filed.
Okay,
So
right.
depending on how
right.
fast they might be generating audits for a specific time period.
Okay.
They will accept electronic versions of receipts. I would still keep the paper. Because what happens is if you store those papers in a garage, in a bin, or in the attic, when you go to pull them out 3 years from now, if you've ever looked at NCR tape or those thermal receipts, they're black. And you can't show what was on them. But if you have scanned them in, like on a monthly basis, one of the services that my firm offers its business clients is we keep a digital record of all the receipts. We do that like after tax season. They bring those year's documents in. We keep them in a file for them. I'm what's called a paperless office, although you'd never know to look at behind me. That's why my screen's blurred. I probably kill more trees than the lumber company. But I keep electronic versions so that if someone's, I had a client who had a fire one year and they needed to go back 6 years in documents. Luckily, I had all those tax returns in PDF form and all their receipts in scanned form, and we could recreate all their documents. And I get the question every once in a while, do you have last year's W-2? I can't find it and I got to refinance. Yes, I do. So
yeah, I've asked that same question. So, okay, thank you. That's really helpful.
Ms. Charles, I have another question.
Yes.
I was told I just started my LLC and it's in education. And I was told that even if I do not make any income, I still have to pay at least $100 for taxes. And I would like to know when do I know when to pay these quarterly taxes?
Okay, so first off, if you're an LLC in the state of California, you must pay them a minimum of $800 for the right to do business as an LLC. And you pay that annually.
Our governor actually waived that for this year, for 2020.
I know, but in generalities, you have to pay that fee every year. And it's usually by April 15th, because LLCs are considered calendar year entities. Certain entities have to be calendar year. Sole proprietors, LLCs, partnerships, and S corps must all be calendar year entities. A corporation, a C corp, is the only entity that can be a fiscal year. That means ending some other year than December, which means those taxes are due by April 15th.
It looks like we have one more question in the chat.
Oh, in the chat?
Yeah.
Okay.
And the question is, do I need an EIN if I am a sole proprietor that will give my consultants 1099s only?
Yes, if you are a sole proprietor, please apply for an EIN, even if you don't have employees. That way you don't have to give your social security number out. You give that EIN number out, and then you'll put that EIN on your Schedule C every year.
Yeah. And any other questions at this time?
I'm a little confused, Tori, about the quarterly taxes. So why do I hear people say you have to pay your taxes quarterly if everything is good with April 15th?
Okay, well, people who have to pay quarterly taxes usually owe more than what you're paying is the standard flat fee. It's the first one you asked me. Someone who has to pay quarterly taxes owes more than a certain amount of money every year and wants to split that in, has to split that into 4 payments.
Got it. Thank you.
Of course.
Good questions. Thank you. And any other questions at this time?
Yes, I do. Tori, I was wondering, what is your business name?
Tax Goddess. I'm going to put my email in the chat right now.
Oh, wonderful.
So if you need some additional help or you have some extra questions, I'm happy to answer them. Just in the memo line or the subject line, put small business workshop for me so that I know that you're not one of my clients asking a general question.
Okay. All right. Thank you. And thank you, Darlene.
You're welcome. Thank you.
Uh-huh.
All right. Again, any other questions at this time?
Thank you. This was very informative.
Great. Thank you.
Yes.
Thank
Thank you
you.
so much. Thank you.
All right. We still have time for questions. If you have any, please let us know.
I don't know if they're going to pass a new tax law, so don't ask me that. I never know what they're going to do.
Hi.
Hi.
Yes.
I feel like I probably would have a lot of questions if, like, I just sort of don't know what to ask. So, going back to the quarterly, you said making a certain amount. So I just brand new started, and I am super nervous about paying taxes, and I hear people be like, "Oh, I owe 20,000," and I'm just like terrified of that happening. So I've been like doing the percentages and being like, okay, I need to save this amount, but is there some general guidelines you can offer around that?
I can. For the first year that you're in business, usually when I work with a new business owner, what I suggest to them is withhold 35%. Because if you're going to be profitable, you're going to owe, and depending on the type of entity, okay, so let's start with assuming you're a sole proprietor. So you've got to cover your income tax on the profit. You've got to cover the self-employment tax, which is the Social Security and Medicare, because as a sole proprietor, you are basically your own employee. So nobody's paying Social Security and Medicare for you. That's called self-employment tax. So you have to pay that. And then you have to pay the state. Now, state doesn't have self-employment tax, but it does have income tax. So that's why I suggest people put aside that percentage, and then sit down with your tax consultant and do a review. I mean, if you're in losses, if you're running a loss for the first 2 quarters, you don't have to make an estimated tax payment. If you've made $100,000, you're probably going to want to pay an estimated tax payment, and more power to you if you've made $100,000 in the first quarter.
Thank you. That really helps. I was way underestimating how much to save.
Those are pretty much the average flat rates. And again, I get calls from my business owner like by mid-year. Can we look at the first 6 months and make sure that I'm on track, so that if that comes that second quarter, June 15th is when the next quarterly payment would be due. Make sure they're on track. Oh, we need to adjust that. We need to adjust that payment up a little bit. Let's make it this instead of this. Do you have a question, Ursula?
Oh, no, I don't.
Oh,
I
okay.
have a question.
Yes.
So I know that, let's say for 6 months, you make $60,000. You put 35% in some savings account for let's say $12,000, just for the sake of argument. And then April 15, you pay the $12,000 for the first 6 months.
Actually, if we're talking quarterly payments, that second quarterly payment would be due June 15th. But if you're talking the first 6 months, we'd actually make that estimated tax payment. You would have needed to make a payment. The quarterly payments are April 15th, June 15th, September 15th, January 15th of the next year.
Okay, I rather just go ahead. Can I set up an account with IRS and just pour money into it as I come to the dates?
Actually, it's probably advisable that you don't do that, because it could get misapplied.
Oh.
That's why it's kind of important to set up your EIN number and then send them a voucher or make an online payment through that EIN number.
Yes, I do have EIN. That's what I meant.
Okay, but you should probably do it through their vouchering system, and when you make the payment, make sure you designate what quarter or what tax period you're paying for.
Yes,
And print off the screens and keep track of them.
yes.
Because I occasionally get the client who forgets to make their payment and thought they made the payment.
Mhm,
And then they get a notice from the IRS that says, you didn't make this payment. And they go, yes, I did. Oh, no, you didn't.
mhm,
And then we get into a 6-month he said, she said.
mhm. All right, that sounds great. Thank you.
You're welcome. Also, don't overpay them, because that's your money and you don't want to, it's scary to think you might underpay your taxes, but overpaying your taxes can be just as bad, because then you have to wait till you file your income tax return to ever get your refund. And those are resources you might need to be paying your bills.
Yeah. Thank you. That was the best suggestion. Do not overpay. I just threw all my money.
It's really hard to convince taxpayers sometimes that big refunds are not good.
Mhm.
But I claim 0 so that I get a $10,000 refund. Yeah, and you had to wait 18 months to get that refund.
Mhm.
You could have spent it and gone on to vacation. You could have gone to Disneyland, or you could have gone to Tahoe, or
Spend on grandkids.
spent it on food.
Right.
All right. And any other questions?
I'm so sorry that I'm taking up all this time for questions, but
You're
I
almost at your limit. No, I'm just kidding.
15 more questions. I was just wondering, I can get the vouchers when I sign in and actually schedule with my EIN, schedule the payments, they give me the vouchers.
Yes.
Okay, good. I'm sure once I start the process, I won't have as many questions, but it's just really scary to deal with IRS.
Well, and it's scary to deal with any state federal agency. It really is. And as business owners, you can deal with up to 4. You've got IRS, Franchise Tax Board, EDD, which is the Employment Development Department, which handles payroll, the CDTFA, which is the California Tax and Fee Administration. If you're selling a product, that's sales tax. And then throw in the Labor Board. So, and workers' comp, you know, so you have a lot of different agencies you have to keep happy.
That's for sure.
All right. Good questions. A lot of great information. And again, want to remind everyone that we are here to assist you at AnewAmerica. I'll put my email in the chat again. If you need assistance with counseling services, additional training, and know about additional webinars, feel free to contact me. So I'll put that information in the chat so that you have that again. Any other questions at this time?
I do. So June 15th feels like it's coming up pretty quick. Do you recommend, if somebody's just started, like when does this kick in for the IRS?
Well, as soon as you started doing business, you're subject to tax. So, and like I said, I'm happy to give you, you know, because you've attended the webinar, I'm happy to do a free 30-minute consultation with you. We could do a Zoom, you know, we could do whatever. I put my email in the thing, in the chat, so I can kind of walk you through some estimating processes and figure out what you're going to do. And you might be a little short for the second quarter, but in tax preparation, there's some things we can do for you as an individual that if you got short on what we could do, what's called income averaging for the year and show what your income was per quarter when we do the tax return. Say, see, we weren't underpaid. We were actually overpaid and going in through the year.
Thank you so much.
You're welcome.
All right. Any more questions at this time? All right. So thank you all for participating today and getting some of this great information provided by Tori, the IRS, and AnewAmerica. Again, in the chat, you'll have the information for Tori Chavez for Tax Goddess and as well as the AnewAmerica Women's Business Center. We are here to support you for your business, whether you're starting a business or in business looking for additional assistance. So we are here to help you with our services. And remember, our services are of no charge. So please feel free to reach out to us and we will assist you based on your individual needs. Again, thank everyone for joining, and this concludes today's webinar.
Thank you.
Thank you.
Thank you.